Let's go ahead and start again. All right, this is meals and entertainment, or how to avoid inviting your government auditors to lunch. I'm going to put the slides up on the website after the webinar and probably put the webinar up now. So the FAR references, everything like this, don't worry too much about writing them down. You can catch them later. My name is Stephen A. Avery. I'm the principal at DCACompliance.com here, or LLC, I'm sorry, here in Albuquerque. And let's go ahead and start again, okay? All right, the agenda is we're going to talk about the issue, which is meal and entertainments. We're going to talk about it from the IRS perspective, and we're going to talk about it from the government contracting perspective. Then we're going to talk briefly about the accounting issues. What's the easiest way to record the stuff in your books to make the auditors look at it and not to have a whole lot of problems. Rules on meal and entertainment expense while on travel are pretty well documented. There's not so many issues on that. We'll get to those a little bit. It's pretty clear on both the IRS side and the joint and the government contracting side. However, regulations when you're not on travel are not clear and can be pretty inconsistently applied by auditors. I've had auditors over the years argue that all meals that were not on travel were unallowable. An example that one supervisor used once was he said that if you brought somebody into town for recruitment, if you went out to lunch with the CEO or whoever his boss was going to be, and the boss paid for it, that was unallowable. If the person being recruited paid for it and it was put on their travel voucher, then that was allowable. So that's one of the extremes that we've had over the years. That one got overturned by DCAA after it was actually made it through the audit report. Okay, in both areas, you pretty much have to, this is still not an exact science. You're going to have to look at these things on a case-by-case basis and require a little bit of art and discretion and common sense. Also, and there's two government audiences involved each time you're dealing with this, both the IRS and the DCAA. And the rules overlap somewhat, but they're really completely different rules and completely different considerations. Normally what works for the IRS does not necessarily work for DCAA or government contracting or government grants. Okay, we'll look briefly at the requirements for the IRS, and then we'll focus on the government contracting issues. In the majority of cases, it's impossible for an outside auditor to separate the social aspect of a meal from the business aspect. Over time, this led to the 50% rule. That's an arbitrary division of M&E costs between business, which is deductible, and social, which is not. And that's just what they came up with statutorily and regulatory over time, just to make this simple, because they knew that there could be both business and personal aspects to it. As a general rule, they're deductible when related to the entity or the business. They have to be related. You can't, I've had guys who said, I'm on call 24/7, so all of my meals and stuff are business expenses. Well, that's not one that's easy to support. There are exceptions to the 50% rule where you're actually allowed to take the full deduction. One is compensation. If it's included in an employee's W-2, then you can deduct 100%. If it's a pass-through, if somebody else is paying for it, you can deduct 100%. And we're going to get onto that a little bit about subcontractors and consultants a little bit. If it's for the benefit of employees, you can deduct 100%, such as a Christmas party. Again, these are all general rules. They're giveaways. In other words, if you give away tickets to a basketball game, that is 100% deductible in most cases. Or if it's the course of your business. If you're a restaurant, obviously you can deduct the costs associated with that. Now, there is ones where you can take no deduction, and the two general rules on that is where it's 100% personal in nature, like we discussed earlier about the 24/7 thing. And the other one is where it's considered excessive, where your caviar and Dom Perignon at lunch would probably be considered excessive by the IRS. So, okay. Now, here is a table from publication 463 that pretty much summarizes everything. I'll let you look at it real quick. There's pretty much everything that we've just been discussing. So it has to be business related. It has to be ordinary, one that is common. Has to be necessary, helpful, appropriate. It's got to take place in a clear business setting, or the main purpose was to conduct business. It's got to be related to the business, and boom, boom, boom. You cannot, obviously there are other rules. You cannot claim it twice. You can't claim it under M&E and then again claim it under travel expense. Okay, let's talk about this a little bit, because this is one that people don't think about a whole lot, especially in government contracting. A true self-employed subcontractor or consultant, that's one that gets a true 1099, it's not a corporation, does not have to limit their deductions to 50% if they're reimbursed by the prime or the client, and if they document the expense to the client. When I go on site to visit a client and I charge them a per diem and I document that and I document my expenses and they pay me for it, I don't have to take 50% off of that on the ME. I deduct 100%. Now the catch is that my client has to take the 50%. So the prime in a subcontractor thing, or the contractor has to do that. Okay. Blah, blah, blah. Now, the 50% offers a couple other additional challenges, but we'll talk about that in the accounting section. That won't take too long. None of this is offered as tax advice. You should consult with your tax advisor on specifics on this, and it changes all the time. That's the important thing to remember also. Okay? All right. Let's get on to the government contracting part. If you think IRS is complicated, you get even more complicated with DCAA, because really the guidance is not as clear. As you may be aware, even with the current crisis in DCAA, now what I mean by that is since 2008, it seems like we have DCAA issues coming up all the time. Things are, a lot of other departments, Department of Energy, Department of Commerce, are starting to go to outside auditors to do a lot of functions that formerly they let the Department of Defense contractor, DCAA, do either as a cognizant agency or just flat out. And the FAR pretty much names in FAR 42.1 DCAA as the main government auditor. So that means that DCAA sets the rules and sets the standards. And we have to look at this thing, it's best to look at, and that's whether you're working a nonprofit, the Department of Agriculture, or working for the Department of Defense, or if your KPMG is auditing your DOE contracts. All of this is something that, you still sort of have to look at from the DCAA perspective, because even then, that's where they're going to turn to. They're going to turn to DCAA for their primary guidance on this. Now, having said that, we got two areas again. We got on travel and not on travel. That's where meals and entertainment divide up. I'm not going to spend a lot of time on travel and meal entertainment because it's pretty much thoroughly covered by the Joint Travel Regulations or the FTR regulations. And you can be, depending on what type of contractor you are, those are two separate regulations. One is DOD and the one is government in general. And they don't always make the same. Sometimes that could be contract specific and sometimes it could be contractor specific. But that's another discussion for later. Basically, you're required to follow the per diem amounts outlined except where there are special or unusual circumstances. Years ago, we had a contractor, we were working with a contractor where they were dismantling former Soviet medium-range missiles in the former Soviet Union. And we were always having problems with that contract working in Russia. And so we were always sending people out at the last moment to get to Russia. And we just grabbed whatever plane flights were available to get them out there as quickly as possible. And that would be a special and unusual circumstances. There's rules for that in this FAR quote that I gave here. And there's actually still limits on it even when you're doing that, on what's allowed. Okay? Now, non-travel is a little more complicated. And this is, basically when you're taking a meal outside of the office and want to claim it as a business expense. IRS, as long as there's a business aspect to it, they're pretty good on this. DCAA, government contracting, gets a little complicated. There's mainly three sections of the FAR that deal with non-travel meal and entertainments. It's 205.14 entertainment, 205.13, 205.43. Okay, all three of them are completely different, and all of them have their own issues and limitations. They tend to be fairly limited in interpretation application, or in construction, but they've really sort of expanded what they mean, and we'll see that a little bit. All of them have these issues where auditors will come in and read it a certain way, and you're going to have discussions with them about that. But the establishing section, the Part 31, the beginning of it, is very clear. And this applies to travel, it applies to meals and entertainment, it applies to most allowable expenses, because that's what Section 31 is on. Now here's the first early part of 31 talking about it. A cost is allowable only when the cost complies with all the following requirements, all of them. Reasonableness, allocability, task standards, terms of the contracts, or anything we say in the FAR. Those are your determinations for allowability. Now, allocability, what we mean is that you have to have a proper way of allocating it that makes it allowable. If you allocate a cost that should be direct as indirect, so the government contract gets a higher percentage of the rates, that would example where it would not be allowable. Okay, now, reasonableness. Here's also the next section talking about reasonableness. A cost is reasonable if in its nature and amount it does not exceed that which would be incurred by a prudent business person in the conduct of a competitive business. Okay? Now, having said this, these two sections of the FAR, in my experience, are two of the most ignored sections of the FAR by a lot of government contractors over the year. I mean, it just very simply says, we're going to use, whether it's ordinary necessary, whether it follows generally acceptable accounting practices or GAAP, or bargaining, or whether it's what anybody else would do, and if it's not abnormal. And we'll see later that those really standards are enforced in the court rulings and appeal boards rulings on these issues. All right, so let's look at some of the specific subparts. First one, let's look at the entertainment costs. Here's the section, okay? Now, these are two pretty long sentences, okay? Costs of amusement, diversion, social activities, and any directly associated costs such as tickets to shows, sports events, meals, lodgings, rentals, are unallowable. Anything that we make unallowable here is unallowable under any other principle throughout the FAR. That's basically what it says. Now, I have seen a lot of DCAA auditors and other auditors read this first sentence as if it's all one sequence. In other words, ticket shows, we say meals are unallowable, etc. Of course, and that's ridiculous. What it really does is you have to parse this in two things. You have amusements, diversions, and social activities, which are not allowable, and directly associated with them, if you have tickets, or if you have meal, lodging, and rentals, transportation, and gratuities associated with the unallowed amusement, diversion, social activities, then that makes the associated costs unallowable too. It's just like an allocability indirect issue. So the three things that are allowable are the amusements, diversions, and the social activities. Okay, so that takes care of the entertainment section. But it really doesn't, because there's sometimes that some of those things actually end up being allowable too when doing that. So the example is, take a vendor to a football game and the cost of the tickets, parking, hot dogs cannot be claimed, despite the fact that you spent the entire game discussing business and missed a call. Take the same vendor to dinner and the rules get a little fun. Okay, let's go to the next section. Trade, business, technical, professional activity costs. When you look at this section, it's pretty clear that, in fact, it specifically says that it's dealing with meetings, conventions, conferences, symposiums, or seminars. Well, that's not really what a business lunch doesn't usually fit under, one of those five things. But because of the title of the FAR, Trade, Business, Technical, and Professional Activity Costs, even though it's written mainly to deal with professional activity costs, the FAR has turned around and have been applied to deal with all non-travel business costs. And this just is how it ended up because of the title, and that's the way the court rule has been, and that's just the way it is. Okay, so when you look at it specifically, it says, when the principal purpose of a meeting, convention, conference, symposium, or seminar is a dissemination of trade, business, technical, or professional information, or the stimulation of production, improved productivity. Okay, so that's the key word for lunches, all fall under the term meeting. And that's what a lunch is. It's a lunch meeting, and that's an important concept to remember when you're thinking about this. Okay, so the other important, and the trick thing is these three things that make it allowable. Business information, which is also trade, business, technical, professional information. And I reworded this a little bit for a reason. Then production stimulation. If the meeting improves production, then it's allowable. Or if it improves productivity, which, sort of sounds like the last two things are pretty much the same thing. Although one may be more specific to a manufacturing environment and the other one to a services environment, but give it as it is. Okay. All right. Now, there is one appeals court that pretty much dominates the interpretation of this issue. It's from the Energy Board of Contract Appeals. It's from 1989. And even though it's that old, it's still being referenced as late as 2011 by the Department of Defense Board. Not surprising, Cotton & Company was a CPA firm that appealed a disallowance of meals from a Department of Energy and pretty much won on all the points. And we're going to talk about that. So here's what the government said, what it says in the ruling. Now, the other normally I would share these. If anybody can find this one on the internet, let me know. But the only copy I was able to get of it was copyrighted. So while I can probably substantially share portions of it like I've done in this webinar, I really can't, I don't think I can legally post the whole thing up there. Again, I'm not a lawyer, and don't want to get involved with lawyers. All right. So anyway, this is what they say. Before ruling on the reasonable costs, we note that lunch and dinner meetings to discuss business matters are not readily identifiable as performance-related or necessary business expenses, since a company can operate without these costs. Before we view them as purely discretionary in nature and subject to contractor abuse, we hold the contractor to a higher burden. Okay? Basically, and we also noticed that these ones in this case were modest and frequencies were low. There's no hint of abuse. Abuse is the key word. Okay, that is a key word towards determining allowability. Now, Cotton specifically allowed 4 different types of non-travel meeting or events: lunch to discuss employee performance, lunch to discuss promotions, lunch to discuss company business, and Friday afternoon get-togethers. Thank goodness for the ones to discuss company business, because then we could probably, we won't have people limiting us to just the first 2. Okay. All right, here's the highlights. We find that taking an employee out to lunch in a relaxed setting free from interference to discuss his future with the company may be for the purposes of stimulating production or improved productivity under the FAR. Okay, the DOE argued that the costs were modest, the costs were well documented, but that they could have taken place at the office, and that a restaurant is not a good place, a conducive atmosphere for the business discussion. Okay, the board's response to that was simple. We do not find respondents' arguments convincing. Dissemination of business information can take place at lunchtime in a restaurant. So that was just flat out rejected. I find, the other thing I hear from a lot of auditors over the years is that if we can't do it, you can't do it. And my response to that is that if it was all based on what government employees can do, the government wouldn't use contractors. And also the Cotton case. Okay, let's look real quick at the FAR for the employee morale and health welfare. In 1986, when they disallowed alcohol on the FAR, a lot of auditors immediately started fighting and disallowing what were called health and welfare accounts. Now, the first thing I did was make sure that all my clients had one. Because as you can see in this FAR, there are a lot of health and welfare activities that are specifically allowable. Okay, and they're designed to improve work conditions, morale, performance, and those are allowable. Now, an example of the less income generated by these activities, if you have vending machines and you get income from the vending machines, you can't deduct the cost of the stuff that's in the vending machines. You have to net it out. So if you sell tickets to something or whatever, or raffle tickets, whatever, the revenue of it has to be netted out. But house publications, health clinics, wellness and fitness centers, employee counseling, and food and dormitory services are all specifically allowed in this section of the FAR. Okay, and this is what Cotton had to say about the Friday get-togethers. Yeah, the afternoon get-togethers are important for employee morale, and that in the absence of abuse of this practice, these get-togethers are allowable. That's their spelling, get-togethers. So, okay, so, but it can go the other way. Just the fact that we have the FAR criteria being met, we have these cases that flat out say it's allowable. There have been issues where people haven't. This is the one I just referred to, November 2011, where it basically said, these people claimed all these meals and entertainment expenses where they were discussing recruiting, but basically didn't document anything to the satisfaction either of DCAA or the Contract Appeals Board. Okay? All right? Apparently they disagreed with the assertion that any expenses incurred outside the office and service of the company are reimbursable. That's a little bit too broad. Okay, you can't just say, oh yeah, we talked about recruiting here. You have to provide an adequate foundation. So let's talk about that foundation. What's the trick? Complete documentation. You should include the cost, the attendees, and the business purpose. That should be included on outside business meals. Frequency. You have to watch frequency. That's probably the one thing where the government's going to sit there and go, well, if you're doing this every day, we're not going to allow this. If you're doing this every couple of months, it's fine. Anywhere in between that, it almost becomes to a certain extent a judgment call. And the more you have it documented, the better. And then there's that fine line between social, that's what we're going to call morale, and business, which is where you have a meeting. Now, the ways to address that is, one, if these things are planned. Okay, if you plan this event like these Friday get-togethers and say, okay, we're going to have a Friday get-together. We've all been working hard this week. We've got a bunch of stuff we got done. Boom, let's get out there and do that. Boom. Now, let's also remember, even though it didn't come up in the Cotton case, that if the auditors had dug a little heavier, they not only would not have disallowed the costs of the meal and entertainment, but maybe the labor too. So that's the other reason why you should probably get it planned. But on the other hand, the occasional spontaneity is arguable too. That's the one thing, that you can do. You can go ahead and say, hey, we just all worked hard. We had a hard time. I'm going to order pizza. We're going to continue to work. That's sort of a working lunch thing. That should make it perfectly allowable also. Okay, real quick, we're going to talk about the accounting issues. And then I got one question. I'll see whether I get any more if y'all want to type in questions. Okay, the following issues that you have to figure out for the accounting is you have to make the IRS happy. You have to keep track of all of these 50% applications to include any subcontractors or consultants that you're playing for. On the government contracting side, you have to characterize milling expenses as either direct or indirect, claimed or unclaimed, okay? And that's just your normal government contracting references, and we have to make sure that happens. Normally, the best way to do that, you have two ways you could do it: tracking accounts, chart, or the chart of accounts. I like a mix of the two to a certain extent. I like to use the chart of accounts on the indirect costs. The government's pretty much expecting to see that anymore, the way they've got their new worksheets and everything DCAA does. So you should have a separate account for claimed meal and entertainment expenses, an 8,000 account, and then have a separate one for unclaimed meal and entertainment expenses that usually starts with a 9. Then the two of those add together, go into the IRS pool for the 50% deduction. For the direct costs, you could do it two ways. I like to keep the direct cost chart of accounts pretty simple. And to be honest with you, DCAA on their latest version of the incurred cost proposal model have sort of broken away from this simplicity that they had for years. You used to have direct labor, direct travel, direct materials, direct subcontractors, and other direct costs. Those are your 5 main categories. And I like to stick to those as much as possible. I'll add on a cost of goods sold account if we've got some inventory issues to deal with them for burdening purposes, but I like to stick to those 6. So, but there is a solution to set up a separate account number under direct travel for M&E and a separate account number under subcontractors for M&E. That'd be fine. And then on the indirect side, if you have a consultant coming out, just take his travel stuff and put it in your travel costs and not in the subcontractor thing. And you can always get a vendor report to find out how much the vendor's costing you. All right, so it's also an important reason why you have to separate this out is that the unclaimed direct costs must be burdened with their associated indirect costs. You have to make the direct costs there. It has to be within those so that it can get burdened with either G&A or overhead as appropriate. Okay? All right, now tracking IDs, Deltec has this, Great Plains has this, QuickBooks has it. You have tracking ID or classes, which especially on the direct side is a good way that I like to track this up. Okay, so one good idea, so that you can set this up as direct travel, class ME, class claimed, class ME, class unclaimed, and do the same thing for subcontractors. And then you've still got those 5 or 6 direct accounts and then you've got the ability to allocate and show the other stuff and comply with that. Okay, first time I did this, I haven't taught in a while either, so I've sort of rushed through this. We've actually done real well on time, and I apologize. When I give depositions, sometimes the court reporters always complain that I talk too fast. Just maybe you can slow it down if you play it back on YouTube when we get it. Let me remind you, we're doing one 2 weeks from now on scanning, then we got one up on the contract audit manual after that, and then I'll schedule a couple more after that. I've got a seminar we're doing in Albuquerque all day on accounting procedures, which are good. My book is for sale on accounting policies and procedures on Amazon or on the websites, and if you buy that ahead of time, you get a discount on the seminar. And let me see if we got any questions. I think I had one earlier. Let me check. Okay. All right, I got something about policies and procedures. How do you handle M&E in your policies and procedures? That's actually a pretty good question, because one of the things the Department of Energy brought up in the Cotton Company case was they said, well, they didn't have policies and procedures that covered that, and the appeals board said, why do you need policies and procedures to cover this? It's not, if you have, why do you need to micromanage that? Which is like one of the first times I remember anybody ever saying that about the, for a guy who has a 312-page book out on policies and procedures, and some of you who are clients out there have been through with me on this, I'm really happy to hear that some things are unnecessary. Probably obviously what you want in your policies and procedures, though, are the documentation issues that we went over. That you want to be able to document the business purpose of it, the attendees, in addition to the costs. And you're going to require people to do that. You're probably, I would use the credit card authorization. If a person has a credit card, then they're authorized to do an M&E, and leaving the on-travel stuff aside, because that's a separate issue. However, if you want to restrict that, that could be possible. That's another thing policies and procedures restrict, is who's allowed to take people out to lunch and for what reason. And possibly it could be perfectly reasonable also for you to set limitations on that. And again, in this case, I'm talking mainly about the latter part. I'm talking about policies and procedures that work for you and don't necessarily address government contractor compliance issues. So you may want to say not anybody with a credit card can take everybody out to lunch every week. You may want to say, you need to get permission from a supervisor, or or you could even set it up in the authority section of who's allowed that kind of discretionary spending, because that's what I really want to think of it that way, as discretionary spending. If it's planned, it's going to be a supervisor. You don't really need a policy procedure for that, but you may want to set somewhat limits on discretionary spending. Although, again, I would argue that if you give somebody a credit card, you've empowered them to do some limit of discretionary spending. Okay, I got one more question. Let's see if I can read it here. Okay, and let me see. And it says, I got a couple more questions. Is it true DCAA will disallow any mills that are documented with summary receipt versus a detailed receipt? 15 years ago, I would have said absolutely. Now with the internet and some of the other issues, it's become a little more complicated. For example, 15, 20 years ago, the DCAA would not consider a credit card bill, which is a good example of a summary receipt, as adequate for substantiating an expense. Now, most of them are a little more lenient about that, because a lot of times it just shows up on the credit card to a certain extent, and there really aren't other good receipts. But as a general rule, they're going to want sometimes to see both. I just got a request from a DCAA auditor this morning from Texas to actually see, from Houston, to actually see both. He wants to see it from the original receipt scaled all the way back to the credit card statement, and then he wants to see that the credit card was actually paid by the checking account. I hope that answers the question. So again, I wish I could be more black and white. As a general rule of thumb, they will want the actual receipt and not the summary receipt. Again, I'm thinking you mean mainly credit card on that, or bank statement, charge, etc., or canceled check. As a general rule, they're going to want to see the real thing. Okay, I think I've got all the questions. answered. And so, boom, boom, boom. And I appreciate the questions. And please join us in about 2 weeks for the one on scanning. That's, even today, came up with this auditor from Texas. So that's going to be, I think, a hot button in DCAA's future. And again, remember the book, remember the seminars. You all have a great afternoon.